Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the E-mini futures contract, the front month continuous futures contract, and identify some potential action areas for the trading week ahead, and then some price targets that we can focus in on as the action develops this week. Before we jump into the technical picture and the levels, just want to update the market narrative, market dynamics from weekend news, and also update the view in terms of market internals, and see where we are in terms of potential catalysts for the week ahead from the macro side of things. So starting with the market dynamic and news over the weekend. Futures and the dollar have taken a bit of a hit as we start the week here. This comes regarding concerns about the Federal Reserve's independence, with Fed Chair Powell revealing that criminal prosecution has commenced into the Fed's refurbishing of buildings, and so an investigation is underway by the District of Columbia. Trump claims not to have any knowledge of this. Whether he does or not remains to be seen as the day unfolds. But that's put a wobble into risk sentiment as we start the week here, and so we've seen a bit of a pullback during Asian markets, and we'll see how that narrative unfolds. In terms of the calendar for the week ahead, data-wise, nothing of note today. Then heading into tomorrow, we get CPI, obviously key input for the Fed, for the upcoming Fed meeting. We also get ADP employment on Tuesday, and Q4 earnings kick off with JP Morgan and the banks in focus this week, starting tomorrow after the close of JP Morgan. Heading into Wednesday, PPI, retail sales, and we once again look to see if we are going to get announcements with respect to the SCOTUS Supreme Court decision on Trump's tariffs. It was thought that there would be an announcement on Friday. That wasn't forthcoming. And so we look now to Wednesday as the next possible date. So keep an eye on that. That could potentially see some significant volatility. We get further bank earnings, Citi, Wells Fargo, Bank of America after close on Wednesday. Heading into Thursday then, initial jobless claims, Morgan Stanley and Goldman Sachs earnings coming out on Thursday. And then Friday, we have monthly options expiration. Talk a little bit more about that shortly. So that's what we're looking at in terms of the data slate from market action last week. We finished up 1.6% for the week and hit new all-time highs on Friday. We're obviously seeing the most recent pullback. We're at 1.8% for the year. Financials, consumer discretionary, healthcare, and industrials also put in new all-time highs last week. Most sectors, however, were flat to up, except for utilities, which was down 1.6% for the week. Overall, sectors comprising 90% of the weight of the S&P 500 were green for the week, also reflected in the equal weighted index, which was up 2.4% for the week. And in terms of the internals, looking at stocks that are trading above their 20-day moving average, that's currently at 70%, up from 55% in the prior week. Stocks trading above the 50-day moving average is up from 57% in the prior week to 69% currently. And stocks, importantly, above the 200-day moving average, up from 59% to 64%. So last week's gain on the S&P was broad-based. This is important to note, with stocks over their the 20s and the 50s and the 200 days all significantly higher. And anyone thinking about this being a narrow-based rally is certainly trying to talk a book there, because we are certainly seeing a broadening and a rotation continues to be seen out of tech, and a more broad portfolio diversification appears to be developing, and that's a theme to keep an eye on as we head into this week. In terms of where we are from an options perspective and the gamma profile, we're currently back to long gamma to start this options expiration week, with 7,000 appearing to be the upside call magnet. In terms of the gamma flip zone, we would need to be trading back below the 68.80 level to move to a short gamma perspective. There'll be a sharp increase in terms of the upside gamma starting around 69.70. And we'd really need to be back below 67.70 on the downside to start to see a meaningful increase in downside gamma and potential volatility to the downside. So in terms of the options expiration, we remain constructive and supportive, with dealers probably looking to cap significant upside rips and significant downside dips at this stage. So that's where we are in terms of OPEX. The straddle for the January options expiration, we've already traded through it on the upside, so 70.08, which we took out and have seen a pullback from there, which we can expect on those initial tests into the options expiration straddle, and the downside is meaningfully lower, back down to 66.61. So not really in play at this stage. And the next the next straddle point to consider, is into the quarterly options expiration, where we have a 72.03 upside level to bear in mind. So those are some options OPEX insights to pay attention to as we head into this week. There'll be further updates on those as the price action develops. So let's move now to the charts and see where we are. In terms of momentum on the daily volume weighted average price, we are bullish above 69.72, obviously trading just below there at the moment. The weekly volume weighted average price is also bullish. 69.05 needs to see a weekly close back below there to flip the weekly momentum bearish. And on the monthly time scale, we would need to trade below 68.52 to neutralize the monthly bullish momentum that we have in place. So on all those three time frames, the daily, the weekly, and the monthly, we are set to the upside. In terms of market structure, we're one time framing higher whilst above 69.55 on the daily. The weekly structure, one time framing higher against 69.32 on the weekly. And then on the monthly, we are one time framing higher versus 67.75 on the downside. So again, as I say, coming into this week, we are constructive. Obviously, we have seen a bit of a pullback overnight, but I really want to pay attention to where we are when the cash markets open this afternoon and how we trade into today's session. I tend to, or certainly over recent months, we have seen these pullbacks during the Asian session that then get bid up pretty quickly into the New York session on Monday. So we'll see if that scenario plays out once again. And in terms of the technical picture now, let's move to the charts and look at where we are in terms of our setup for the week ahead. What I'm looking for as we start the week here, I'm using a weekly bull bear zone at the 69.35 to 69.25. We have just below there weekly implied volatility support at 69.20. So initially what I'm tracking is any pullbacks into this area, be watching for bullish reversal patterns to engage on the long side. The next upside objective then will be to recapture the year-to-date anchored volume weighted average price, which sits just below 69.70. Through there, the key next hurdle is going to be the anchored weighted volume average price versus our all-time highs, which now sits just above 69.90. So that's going to be a key zone as we come into this week, as we're currently trading below there. Want to recapture that early in the week to set continued momentum to the upside. We'll then look to take out prior all-time highs, and we will then be targeting the weekly projected range resistance on an implied volatility basis, which should see us testing up to the 70.90 level. We also have their monthly projected range resistance just below that, and the weekly R2 at that 70.92 area. So that's going to be our initial upside objective on the week. If we continue to hold the overnight lows into that 69.50, then again look for this test of the volume weighted average price anchored against our all-time highs at the 69 at the 69.90. If sellers step in again there, then that could set us up for a test of our weekly bull bear zone. But again, I have the same play in mind. I'm looking at the potential to buy the weekly bull bear zone, looking to test weekly projected range resistance or on acceptance back through the anchored weighted volume average price at that 69.90. The alternative scenario is that we do trade lower, we test the weekly bull bear zone and weekly projected range support at 69.20. We don't find sufficient supply. Then we look for a pullback into the 69.05, that weekly volume weighted average price level. And from there, what I'd be anticipating is we get a retest of the bull bear zone from below. If sellers step in there and we hold that as resistance, we're going to target a move down into test that 68.50 area, which is obviously the monthly and volume weighted average price. From there, I'd be watching for buyers to step back in and get a retest then of the bull bear zone from below and see how price action develops there. So the key levels below that are, once again, I would still be looking at long exposure will be the 6,900 or the 68.50, and then we'll see how price action develops at a retest from the bull bear zone from below. I'll be providing further updates on a daily basis as the week progresses. But those are the key levels that I'm tracking and the setups that I'm looking at as we start the week. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.